Hello, and welcome to Headline Reports. Today, we are looking at one of the most important links between foreign policy and the global economy, US oil politics with Iran. This story is not only about crude oil, it is about sanctions, China, shipping routes, gasoline prices, and the balance between pressure and diplomacy. The first point is sanctions. Washington has continued to target networks accused of helping Iranian oil reach foreign buyers. Recent U.S. measures focused on people and companies linked to Iranian oil shipments, including networks connected to China, Hong Kong, the United Arab Emirates, and Oman. The goal is clear: reduce the revenue that Iran receives from oil exports. U.S. officials argue that this money can support Iran's military programs, regional allies, and drone and missile development. So for Washington, oil sanctions are not just economic policy. They are part of a wider security strategy. The second point is China. China remains a key part of the Iran oil story because Iranian crude often moves through complicated trading channels. These channels can include front companies, ship-to-ship transfers, and so-called shadow fleet activity. By sanctioning companies involved in this trade, the United States is sending a warning to buyers, refiners, and shipping firms. Dealing with Iranian oil can carry financial and legal risk. The third point is the Strait of Hormuz. This narrow waterway is one of the most important oil routes in the world. A large share of Gulf oil exports moves through or near it. That means every military incident, drone threat, tanker seizure, or political warning near Hormuz can quickly affect global oil prices. This is where energy politics becomes global politics. If shipping through Hormuz looks risky, traders begin to price in possible supply disruption. Insurance costs can rise. Tanker routes can change. Governments may also consider using strategic reserves or pressuring producers to increase supply. The fourth point is oil price volatility. In recent days, oil prices have moved sharply as markets reacted to both conflict risk and hopes for U.S. Iran diplomatic progress. When investors believe a deal is possible, prices can fall. But when military tension rises or shipping looks unsafe, prices can climb again. For the United States, that creates a difficult balance. A hard line against Iran may increase pressure on Tehran, but it can also increase oil market anxiety. And higher oil prices can feed into gasoline prices, transport costs, and inflation. That makes Iran policy both an international security issue and a domestic political issue. So what is Washington trying to achieve? The United States wants to limit Iran's oil income, protect shipping routes, keep pressure on Tehran, and avoid an oil shock that could hurt consumers and the wider economy.